Hello, this is Coach Myrna Young. I am the host of the Mindset Transformation radio show and podcast. And today I just wanted to talk to you about being a guest on my radio program and podcast or being a sponsor. The show has a lot of touches. It is on 99.1 FM in Atlanta. It is on Blog Talk Radio. It is on the internet, iTunes. I post it on LinkedIn and Facebook. I converted to a YouTube video. So your marketing efforts to get your story out there or to get your services and expertise out there, it is the perfect venue to do it. So if you have a story, service, a book, or anything that you would want to get the word out there, just contact me at info@myhelps.us for more information. Bye. Welcome to another episode of our Investing in Real Estate, our Fund, Fix, and Flip series. I'm your host, Coach Myrna Young, and we're also talking with my co-host, speaker, trainer, Mr. Trevor Evans. Welcome, Trevor, to our second episode.
Thank you, Myrna.
Of real estate investing. Yeah, we started off with a bang. I got lots and lots of responses, and everybody was very encouraged about our topic, and hopefully that our second episode today, which what we're going to be talking about, is the rental part of the Fund, Fix, and Flip series. And we had a question that came in that said, is owning a rental worth the headache? So we are going to go dive right in. And I want to start off today with something new. I want to start off with a joke. So you guys better laugh.
I'll laugh.
All right. All right. So a young woman pursuing a graduate degree in her art history was going to Italy to study the country's greatest works of art. Since there was no one to look after her grandmother while she was away, she took the old lady with her. At the Sistine Chapel in the Vatican, she pointed to the painting on the ceiling. Grandma, it took Michelangelo a full 4 years to get that ceiling painted. Oh, my, the grandmother says. He and I must have the same landlord.
Now, that is funny. It's funny and it's true. It's funny and it's true.
Yeah. Yes, you're right. It's funny and it's true. That's why it's so appropriate. All right. So you might have been tuning in to our show for the first time today, or maybe you have been, a regular subscriber. But in case you're tuning in for the first time, let me tell you a little bit more about my co-host, Trevor Evans, and also a little bit more about myself. Okay. I met Trevor, or I interviewed Trevor the first time on this show on the topic of paths to financial freedom. And we received such an overwhelming response to that topic that I decided to do a spin-off on the real estate investing. And we're starting off with the funding, fixing, and flipping. For those of you who tuned into our first episode, you know that Trevor has also a mortgage background and knows a lot about the funding part of it because he's also a banker. So at some point in time, we are going to transition from the funding, fixing, and flipping to some of the other vehicles and some of the other skills in real estate investing. So our first episode, we answered the question, what is the number one mistake that people make in the funding, fixing, and flipping? And that was the wholesale part of understanding the process of purchasing real estate, making sure that you're finding the right price, making sure you are understanding the process. So if you haven't heard that segment, be sure to check that out on my podcast, my iTunes podcast, or even on my YouTube channel. You can search for Transform Your Mind with Coach Myrna. So today we're going to tackle the subject, like I said, is owning a rental worth the headache, right? Again, a little bit more about my co-host. He has been a husband for 19 years. He's the father of 2 children, ages 22 and 18. He is a speaker, trainer for the Legacy Education Alliance, also called Rich Dad Education. Trevor is an entrepreneur, a real estate investor, banker, and founder of the personal brand Being Normal Sucks. Welcome again, Trevor.
Thank you.
Pleasure. All right. So, and a little something about me. I haven't traditionally told you anything about me. I just normally talk about my guests on the show. But again, we're doing things a little differently. So here it goes. I'm married for 12 years now to my soulmate. It took me lots of tries to get it right. I got married the first time when I was just 17 years old. That marriage produced my firstborn son. My second marriage produced my beautiful daughter. So for a short time, I was part of the millionaire family, a boy and a girl. My daughter was born on my 30th birthday, so she was a gift, and she is a gift that keeps on giving. Every year we celebrate our birthdays together. My current marriage, we adopted 3 children, so I am the mother of 5 children. In addition to getting married lots of times and being a mother, I'm also the author of 3 books. I'm a certified life coach, entrepreneur, realtor, and investor. So I met Trevor earlier in the year when I attended a Get Motivated seminar, and I signed up for the 3-day real estate program. Like, I've been a realtor for a while, but the guy at the Get Motivated was, he was one of the best speakers, until Trevor, of course, that I ever heard. He was amazing. And got me to say, hey, you know what, maybe there's something I need to learn. But then it kept getting better, because then I sat into Trevor's training for 3 days, and my mind was blown away. There's so much that he knows about everything: credit cards, mortgages, fixing your credit. I can go on and on, how to find properties in the area, how to, there's just so many things that, being one-sided as a realtor and selling and renting properties that I didn't know. So that made me want to learn more, so I signed up for the legacy training, specifically on a couple of things that I want to specialize in. So I invited Trevor on my show. Like I said, he came on the first time, and I realized that there's such a need for this information. So every 2 weeks now, we are going to talk about the real estate investments, and then my other 2 weeks, then we're going to do the regular life coaching growth part. So want to give you just a short tip of the week this week. And again, I'm taking this from the book Your Money and How to Keep It by Brian Costello. And he asks the question, what is the best choice for an investment? And real estate will be a natural choice for many as an investment vehicle, because generally real estate can be counted on to rise in value over a period of time. Now, if you want short-term investments, you can use short-term investment vehicles such as treasury bills, Some other options are gold, commodities, and options market. Small investors are now switching to mutual funds because they offer a great deal of flexibility and they can be cashed out at any time. But the best investment choice depends on your country laws as it relates to the capital gains tax versus interest tax. In the USA and Canada, interest is taxable, while you can make lots of money tax-free with capital gains, right? So I think Brian was from Canada, and apparently in Canada, all capital gains are free. Here, it's the first $250,000, which is still a lot of money. Right, Trevor?
Yes, ma'am.
Okay. All right. So let me give you a word from one of our sponsors, and this is Young Investment Services. Are you looking to invest in the South Florida market? The time is ripe for investors. Call Young Real Estate Investment Services at 954-999-6125 for all your wholesale or rehab purchases, buy and hold rental properties, or property management services. We are licensed in real estate and property management, and we will also buy or lease your house. So don't delay. Call today, 954-999-6125. All right, so for Trevor, for those of us that did not hear your the reason why you're so qualified to teach on this subject, do you want to start us off by just giving us a little background of, what made you become a real estate investor and what made you love it so much that you now teach it?
Well, what made me become one is making a stupid decision. And as you know, anything worth doing, any risk worth doing always looks like a bad idea. Mm-hmm. Okay. And so it began the same way. I went to a seminar and pretty much got sold, and opted in and I came in with a goal in mind, and that was to use it as a vehicle to create the life that I wanted to live, not necessarily what I wanted to do. And as I said earlier, words don't teach, experience does. And so people often, call me an expert on certain topics, and it isn't because I created the topic or wrote the book on the topic. It's just more so I have experience in that topic, and the more experience you have, along with that competence of that of the rules, you're able to profit in arenas where most people can't profit in, because you're able to create that longevity. So the more you're able to do something, the more experience you have, the more you know, and the more you know, obviously the more you can make. And so what would make you an expert at something is your ability to teach people to duplicate your results. And so that's what I do on the weekends. And if you and people look at that as being an expert, so expert requires experience. So I would say that's what gives me that title as an expert, is I actually do what I teach.
Awesome. Great. I love it. Now, as you said, teach people to duplicate results. I remember that in any of the books that you read about how someone has gone from nothing to a billionaire, they're always going to tell you that a system is the way that they did it. A lot of people use McDonald's, for instance, when they wanted to show what a system looks like, because McDonald's has a system where the 16-year-olds can duplicate it, and that is why they're one of the most successful people. So, businesses. So basically, I love it what you said about you teach people how to duplicate the results, and your expertise come from your experience. And I know if you missed our first session, our last segment, we talked about understanding the rules and understanding the process, and the process is the system, right?
Yes.
Okay.
Yes.
Awesome.
And
go ahead.
Oh, and all a system is a group of principles that you don't waver from, because a principle doesn't create your success. It just prevents the failure of that success that you're trying to attain. So you set up a system, and you don't waver from it. Like we said with McDonald's, you can go into any McDonald's and all over the world, and the cheeseburger will taste the same in every single country.
And the fries.
And the fries. That's a system. That's a perfect example of not wavering from a principle.
Right. And that once you've got it down pat, anyone can do it. And it's the same as in any business, as even as in the real estate business or in the investing business. If you've got a system, then you can pass it off to your team and know that they're going to do it, because these are the certain principles. If you don't have systems and you don't have principles, you can't pass it off because you don't know what someone's going to do. And which is why a lot of people don't actually succeed, because they have no one to pass on to help with the work. And you you can't do everything yourself. So perfect way to start our segment, talking about systems and teaching people how to duplicate what you've done. You've when you figured out how something works and how it works the best way, then you can pass it on to someone and let them know not to waver from it, because you have people that want to take shortcuts. But once you set up the principles, and I also like what you said, that the principles prevent failure, right? Not necessarily determine success. Because if you tell someone, as far as real estate goes, and again, we're, bridging our first segment, I'm going to buy properties in this particular area because I've done the work on it. I know that it's going to appreciate 5%, for instance. The most popular one is 3-bedroom, 2-bath, and that's what I'm going to go with. You know what I mean? So when you set those principles up, you can't have somebody come into you and says, hey, you know what, I got this great deal on a 1-bath, 1-bedroom property. You know what I mean? And because you said, no, that's not my, that's not what I wanted.
Yeah,
so
it's because people... Right. Yep. People want to ask you, well, what did you do to become successful? And you can tell them what you did to become successful. Well, I got into real estate investing, or I flipped houses, or, I did that. And what they don't understand is it's not what you did that made you successful, but it's how you did
it. Yes, true. The how. Right.
Yes, and that's where the process comes in, and the system comes in. So it's not what you did that made you successful. It's how you did it.
It's how you did it. Perfect. Well, that's a good segment to our question of the week. Is owning a rental worth the headache? So take it away.
Well, to just segue into that. If you're getting headaches in your rentals, then it's not what you're doing that's creating the headaches. It's how you're doing it that's creating the headaches. Because I have plenty of people that invest and do rentals and don't have the headaches that over half of people do, and it's because they set up their system, set up their business, their process to not create the headache. And one of the major causes of headaches in rentals is people do not properly screen their tenants. Okay, there is no such thing as a bad tenant. Okay, there is no such thing as that, but there are bad landlords, because at the end of the day, you put them in that property. Right, and you put them in that property for whatever reason that you chose to do that. So when you put them in that property, you're saying either I don't know of the headache that they're going to give me, or I don't care about the headache that they're going to give me. So that means you didn't properly screen that tenant. So tenant screening is very, very important, and most people don't do it because most people do not have that process already figured out before they even get into a rental situation. And they buy a home, and they either bought it cash or they bought it on terms through a bank, and every month it's empty, it's costing them money. And so, a few months go by where they're rehabbing the property or whatever they're doing, preparing it for a renter, but at the same time it's costing them money. And so they're paying interest on money they borrowed. They're paying money out of their pocket to fix the property up, or they're borrowing that money as well, which will also cause them to pay interest. And so over time, that becomes a headache. And so now to quell that headache, they'll take the first person that will pay first, last, and security, if that, and not properly screen the tenant. Okay, so the only reason why they put the tenant in there was not because of what the tenant will do in the future. More likely, it's probably to quell the headache of paying interest on money that they don't want to pay anymore for the last 2 or 3 months, or they have someone to pay back or whatnot. So the choice wasn't made based off of a future result. It was made off of a past choice that they're now enduring, which is to quell this problem, okay? And when you quell that problem, you're now going to be faced with future problems. So tenant screening is very, very important in rentals. You have to know what you're getting, who you're putting in that property, and what that individual not only is capable of doing but will do.
All right. Well, I can help with that answer because as a realtor, I've done lots of this, whether for the properties that I manage or the properties that I own myself. And you were very right. Depending as well on the price point of the property. For instance, I have had a property that I've been managing for my brother now for, 7 years or so. And we've always had great tenants that, have stayed in the property for 2-3 years and paid the money on time because they're paying $2,000 a month, and this is a 5-bedroom home in a beautiful neighborhood. But the properties that I rent for a 1-bedroom that's $600, I mean, it's like a revolving door because that price point, you never have a good batch. And you can sit there forever and say you're waiting for this perfect person, but they don't come. And then you take the risk and you say, hey, you're right. If you get at least first, last, and security, then at least they've paid for last month. You know what I mean? So, yeah, but having someone not pay the rent is just one of the headaches that landlords have. That's just one part of it. So,
right.
right. Mm-hmm.
And you're right when you say price point does help, because when you're getting into rentals, okay, what you're getting into is into the mindset of the renter, and there is such a thing as a renter's mindset and a buyer's, a homeowner's mindset, right? Yep. And a renter's mindset is just to be able to pay the next month rent. Okay, they don't care about your home. It's not their house, so they won't take care of it, nothing like that. Nope. And so if you go a little bit deeper with that, then you may want to say that the environment that the home is in is going to invite that same mentality of a person, because a person that would rent a home in a upstanding family-based type neighborhood would not rent a property in a low-value type neighborhood, because that's not the environment that they want to be around. Right. So if So if someone wants to rent a property in a low value type neighborhood, then that right there is a big sign of that person's mentality. Not saying that they're all like that, because they're not. Some are just, are put there because of financial reasons, okay? But a lot of it is, the environment invites that type of mentality, and so you have to be careful where you also choose to hold your properties at, because that area will attract the type of tenant that you want in that property or don't want in that property.
Right. Yeah, and I remember in our training, you guys have a word for those, the war zones. Like if you're going to be renting in the war zones, then you should expect headaches. In fact, there's a neighborhood by my house that I want to invest in, and every single person that I've talked to said that if you're going to invest there, you have to have a gun. And, obviously they're saying you have to have several people have said that to me because it's a war zone. Anyway, go ahead.
Right. And if you are going to invest in the war, and there are plenty of investors that do invest in the war zone and don't go through those headaches, because within their process and their system, they set up that system to where they're not the ones involved in the rent collection or the vetting process. They'll buy the property there. They'll buy a property to where it will create cash flow for them, and then they assign the management team, and so you don't have to own a gun, just that property manager.
You're so smart. That is very true. Yeah, that's the property management. And then, you set up a system where you don't even have to go collect it, where you put it in the bank and you have them. Yeah, good point. Yes. Anyway, sorry. All right. So we're talking about the renter's mindset. And as you were talking, I remembered my very last tenant that I've just put into my brother's property. This woman is renovating the whole property, costing her thousands of dollars, and she's doing it because you're right. She doesn't have a renter's mindset. She has an owner's mindset, and the only reason she's renting is because she can't purchase right now, and she's renovating the whole property. So I called, my owner, and I said, I'm really worried because she might not want to leave after the year. And he says, well, she has a year's lease. So she decides to go out and renovate the property on her own. She's got a year's lease. But so I just remembered that because it's the first time anybody has ever done anything like that. It just collaborated what you were talking about the mindset of the people in different environments. So that's good.
Right. My sister, she invests in mobile homes, and there are some cases where things will pop up on you. And as a matter of fact, she texted me this weekend that she has to evict one of her tenants in one of her mobile homes. And the reason why is because the tenant is showing signs of dementia, and he's being a disturbance to the park. And so that wasn't disclosed to her at that time of vetting the tenant. And so because she owns the mobile home, and she's renting it, the mobile home park cannot by law evict the renter. They can evict the mobile home owner, which is my sister. And so she now has to evict the individual. So any headache that you incur, you want to jot that down. And so now we know to ask each tenant, okay, does the person
that is true
living in the
experience? Yes.
Will there be, does the individual have any health issues such as dementia, Alzheimer's, are they under a doctor's care, things of that nature, you don't have to ask to see any of that personal HIPAA stuff. That's not what you're asking for. But you want to see, hey, yeah, he's been seeing a doctor for, a psychologist for this reason. Well, that can be a determination as to, okay, is it a good person or not? Because again, it wasn't disclosed, and so again, it goes back to me saying, words don't teach, experience does.
Yes.
And so now she knows. Now, part of her process is to ask that question.
Right. Well, it also goes to, I had a tenant in my condo that was a drunk, and 2 months after when I rented, he had a job and everything, lost that job like in the same month, and was just sitting around a complex drunk, and annoying it was a condo association, and the condo association wanted to evict him. But what saved me is that his father put him in rehab and paid the rent for the rest of the time.
Right. And people take offense. When you ask them, do you drink alcohol? Do you take any recreational drugs? You're not asking because you want to know. You're asking to see if this will become a problem one day.
Right, yeah. Well, I don't think, because as a realtor, I don't think that we can ask those questions, but hopefully it will show up when you do the background check, because the background check shows disturbance of the peace, and it shows those type of things. So if the person's a drunk and the police was called, then it shows up on your background check. Right,
because now when you ask that question, yes, you're right, there are some questions you cannot ask, and by asking those questions, depending on what you do, based on the answer, could put you in violation of a federal housing law that can now get you into trouble. Okay, so you might want to be a little coy in how you find that stuff out. And again, your background check does provide a lot of information that can let you know if this person had a history of run-ins here or there or not, or whatnot.
Right.
And also always call the previous landlord and find out why that person left.
Yep. Well, well, that's normally how I did my screening. And you started off saying that one of the reasons that people get headaches is because they're not screening properly. Now, I personally screen by doing a background check and calling the job and calling, previous references. So that helps it a lot. But I think, I was also working for a huge company, being, one of their preferred agents. And they had like 19,000 rentals across the country. I think they're like number 2 as far as rental markets. And they didn't do any of that. They just concentrated on how much money you made and a background. They didn't check any of that other stuff. So it would be very interesting to me and to any of the other, managers listen to this call. What do you consider a proper screening in your experience?
I can tell you what probably would enable a company to do that is they probably only rent out properties in a particular area, okay, and probably a particular price point. Because again, the area and
that is true.
Because again, the area and the price point attracts people of that caliber, and most likely people of that caliber don't have the problem.
You're so smart. That is, I never even thought of that. That is very true, because they only go for, very high-end homes. Right.
There you go. There's your answer. That's why they don't do it. So that's a.
So when you go for high-end homes, that's all you're interested in, how much money they make?
Because typically those people, who makes the most money, Myrna? People that don't have law issues, people that work hard, people that are successful, people that have desire and ambition and discipline, people of good character, people that have families, people that want to live an upstanding life as far as society. They just can't qualify for a bank loan or whatnot. So those type of people, you don't see too many, people that abuse alcohol or drugs or anything like that. You don't see those type of people holding down long-term jobs and making big money. Okay, And so
that is an aha moment. You see, you're still giving me aha moments. I did not figure that out on my own. I figured, okay, they must be. I'm thinking that they did their research and found out that all that other crap don't count. That all that's important is that you can pay the rent.
No, the environment already did the research, because the environment attracts people like that, and that's where I talk about. I don't know if you remember in class how I say there are inappropriate actions and inappropriate actions,
True.
right?
True.
Well,
Yeah.
investing, buying and holding in a more desirable area, affords you the ability to eliminate these inappropriate steps that will make your success faster, more efficient, because now I don't have to focus on a person's, background check so much, because typically people that want to live in these areas don't have those issues. And they're probably older individuals, too, that have gone through life and gone through their experience and get all that bull crap, years ago.
Mm-hmm. True. Awesome. All right, so that explains that. So then when I'm going for my one-bedroom, one-bath property in rental property areas, then I certainly shouldn't adopt their principles, because then I'll get
Correct.
burnt.
That would be inappropriate. That would be inappropriate.
So I'll get burnt. All right. So, what would you leave our guests, or listeners, I should say, with your experience? I know, what are some appropriate actions to rent in a normal neighborhood? We're not in the war zone. We're not in the high end. We're in the regular area.
Well, first and foremost, know your tenant, all right?
Okay.
And also, you may want to create a database of people that may want to rent in that area prior to you acquiring the property, because you can always put out there a feeler ad that may say something like, renters wanted, so-and-so, call so-and-so. And when they call, you can say, I don't have that property yet in my database, but I'll be acquiring some here in the near future. What are you looking for? What area? And you can start a pre-vetting process there, and then say, okay, well, once I find a property in that area that is around what you're looking for, may I give you a call? And so that could be a quick way to create a buyer's list now, or a database of end users before even getting into a project. So so now at least the headache of finding someone quickly has already been taken care of, because you put out there an ad already that pre-searched that, all right? And when they call in, you just say, I don't have that property yet in my database, but I will be acquiring some soon. And if I do, may I call you back to see if you're still in the market for that property type in that area? And you now have their permission to call them, okay? And so you're not bothering anybody. That's all part of the screening process, okay? So tenant screening is important. And then another one would be making sure that your cash flow is positive, all right? And people always use the benchmark of $200, okay? Which is fine. I wouldn't bring out anything at just $200. Now, that's just because of me and my experience, but you want to have some positive cash flow in that project. You don't ever want to go for just equity or breaking even, because you're investing is you getting a return on whatever your investment is. So cash flow is important, okay? And also finding the good deals, all right? And not just finding the good deals, but also the ability to create that good deal through buying properly, buying at a discount, not buying retail, and also finding deals that don't require that much of a rehab work, right? That's good. Know that repairs are going to be needed prior to the project and probably during the project, because those people probably will create a lot of the repairs that you would need. So if you are going to rent, it will be a good idea to get to know your local scratch and dent places. Probably open up a warranty for your appliances, so that way you can give the renter and say, hey, if the freezer goes bad or the fridge goes bad, just call this company and they'll come out and take a look at it, all right, and they'll fix it. If they replace it, just call me and let me know that it's been replaced. So a good warranty company for your appliances is good, because now you pay a fee, a very, very minimal fee for that warranty company to be called and not you. And the only time that the renter calls you is if they replace the appliance. Right. So that way well, in this property I have a new fridge because they came out, and put one in there 4 months ago. In this property I got a new freezer. In this property I got a new whatever. So research appliance warranty companies that will do that. And then finally, your property manager. Okay, you don't want to be the individual that goes and collects the rent. Okay, and you don't want to be the individual whose name is on that check that comes in, because now you're introducing yourself. If you are investing in a pretty volatile area, you're now risking your safety and all that. And if for some reason the renter can't pay this month or whatnot, and you go to collect the rent and they can't pay, more than likely that conversation is not going to be pleasant, and you don't want to risk yourself getting hurt or anything because the renter and you are getting into it. Let that be done for your property management company, all right? Because the bigger headache that people don't see is taxes, all right? You're not going to save anything by collecting your own rent and avoiding a 10% management fee if you do that yourself, because there are underlying tax implications that you don't see when you do receive that check in your name. So property management is very, very important, and also to make sure that they're doing their jobs.
Okay. All right.
Those are probably
I learned something else now. Because I manage my own properties, and of course I manage other people's properties. But yeah, okay, get that. So now, so that means that if you're able to get a good deal with great cash flow in a war zone, because again, from our learning and from me being a realtor and all that, in the war zone, it's like 100% rental. So it's the area that you buy and hold and rent. And a lot of times you can buy a property really cheap in a war zone, but rents are always around the same price kind of thing. You know what I mean?
Right.
Which is why a lot of people, which I've not broached it yet, but you guys also teach mobile home parks, because you can, you can still get decent amount of money for a mobile home that you can pay like $10,000 for. You know what I mean?
Or
so
less.
It's a huge cash flow, right? But yeah, because rent is rent. I mean, it doesn't go down below a certain point, right?
Yep.
So I mean, and if you're going to have a property manager handling it, my broker is a property manager, and he's telling me just last week that he's down at a courthouse every day evicting people. And I says, you evict them and you're the property manager?
Yes.
Yeah. He handles all the dirty work. It's not bad at all.
Yeah, and a lot of property management, they also know of the rules too, because property managers have rules they have to go by the county and by the state and by the federal government, and a lot of those rules do apply to a renter a landlord as well, but it's not conveyed to the landlord. Okay, and so they're a good property management company is on top of the federal housing laws and what can be done and what can't be done, and they can assist in any, if not all, of the processes that you don't want to be a part of. And again, the cost that they charge you, the fee that you incur for them to do that, it's all a cost of doing business, which is a tax expense now for you as the investor. So, you're making money for someone else, doing a job that you shouldn't want to do anyway.
Right. So I'm assuming that you have property managers manage all your properties.
And also my own property management company too, because you can be your own property management company for your own different properties, and so you can if you have to collect that rent, okay, then you collect that rent not in your name but in your property management company's name, and now you don't charge so let's say because if let's say you're financing the property and your rent's $1,000 a month, but $500 of that rent is going towards your home loan that you're paying for, and the other $500 is now cash flow. Even though you can deduct the interest that you're paying on your loan, okay, if you get a check in your name for $1,000, all that money is not going to you. Over half of that is going to your mortgage company.
Right.
Well, Uncle Sam doesn't care about that. Uncle Sam sees you as an individual making $1,000. So think about this. Why would you want to pay taxes on money that's not even yours?
Right.
Okay.
Right.
So so have it come in your property management company name, right? And then which would be you, right? And now you send your $500 to the bank, and then the rest now comes in cash flow. However, because you have a company, you can also charge a fee, and you don't charge a percentage; you charge a flat fee. So if your cash flow is $500, then your flat fee can be $400. And now you pay taxes on $100.
Wow.
So if your fee is $400,
so awesome. You're talking to me directly because, listen, you don't know. That's exactly what's happened to me. I got audited, and, yep, the money was coming to me personally, and that's not going to happen again. So you just helped me.
So if it must come to you, have it come to your property management company, and then you can send the half to your mortgage company, and then the rest comes in cash flow. But then your company charges a fee, but it's a flat fee of $400. And that could be a business expense. So find something that can go towards as a business expense. And now you're only paying taxes on $100.
$100, right? Instead of $1,000. Yep. You guys listening? You are seeing what I saw. This man is phenomenal. I am learning along with you. So that was extremely good information on so many levels. So this is what we've learned. We've learned how to invest in the war zones and not have to carry a gun. You've learned how to have property management companies collect the rent, whether you're owning the property management company or you're really, not local, because, the people that I manage properties for, they're not local. They're in Canada or some other parts of the world, and then you actually do need somebody local to collect the property, to manage the properties for you and go walk them and fix things and all those things that you need to do. So you've got the choice there. Great information on setting up the warranty deal with a local scratch and dent person that will come out and replace or fix. I do have that. They only give a 30-day warranty, but if they sell the property, if they sell the appliance, then they will come out and fix it if it goes bad. So the warranty is not extensive. So same kind of information. And then the most valuable information is screening and, understanding your tenant so that you don't have the headache tenants in. The good news about any experience is that once you get one, then you know what not to do the next time. So, the first time you rent to a tenant because you had a property that was sitting there and you took the first person that came by. And I've been lucky that I never had to go down to the courthouse and evict somebody, because that's a nasty experience. I've been lucky that, all my tenants have moved out with a 3-day notice. But, I had my sister that lost her house in Atlanta because she couldn't get a tenant out. And Atlanta they don't have foreclosures. They have deeds. So the company, she couldn't pay the rent because couldn't pay her mortgage because the tenant wouldn't pay the rent. And in 2 months, they took her property. So, you can have a really nightmarish tenant that you can't get out because they have learned the rules and they know how to play it. So it becomes very important to know your tenant, because if you've got a choice of having your property vacant for a couple of months or having a tenant that you can't get out for a year, which one is worse, right? So,
exactly.
Exactly. So this was an extremely valuable conversation, and I'm sure that you were able to glean a lot of information from us. So let's take our final break, and we'll be right back to wrap up the show. Stay tuned.
Welcome to Mindset Transformations Radio Show with your host, Coach Myrna. Do you feel the need to do more with your life? Are limiting beliefs holding you back from true success? Enjoy a unique blend of interviews, discussions, and transformation coaching in every show. Get the tools for success. The Mindset Transformation Radio Show with your host, Coach Myrna.
Welcome back to Mindset Transformation Radio Show and Podcast. I'm your host, Coach Myrna Young, and my co-host today has been speaker, trainer in the real estate, wealth management, and investment field, Mr. Trevor Evans. And I know that you guys are just amazed, like me, at his knowledge and his experience and his expertise, because, I've been in this space for 17 years, and I'm still learning. So if you guys are new to this stuff, it must have, blown you away. So as we wrap up, I definitely want to thank Trevor for, taking the time to impart his knowledge into you and me. And just, let him know that, I look forward to our next segment where we'll be continuing in the vein of real estate investment in the Fund, Fix, and Flip series. If there's something that you would like us to talk about, you can send me an email at info@myhelps.us. If you would like to be on one of my regular segments where we're just talking about coaching and having people live their best life now and how to grow, then you can, send me an email as well, and I will send you a questionnaire, which I send out to all my prospective guests. Definitely follow me and subscribe to the podcast, because this is good information and you don't want to miss it. You can subscribe to the podcast by searching on iTunes for the Transform Your Mind podcast with Coach Myrna. Trevor is going to let you know how you can contact him. He has got a brand new website that should be up by the time this segment airs. So go ahead, Trevor, and tell them how they can get in touch with you for more of your brilliance.
Yeah, the website will be live here real soon, and it's www.beingnormalsucks.com. Again, it's beingnormalsucks.com. And if you do want to reach out to me, you can email me at trevor@beingnormalsucks.com as well. And that site it's primarily a personal development site, resource site, but it does encompass a lot of real estate and a lot of investing knowledge and money knowledge as well, because a lot of personal development can be rolled into your wealth creation, wealth management, life as well. So lots of cool stuff on the site, T-shirts, merchandise that you can purchase. So look for that site to be going live here real soon. And again, if you need to reach out to me, you can just email me at trevor@beingnormalsucks.com and post your question to me, and I'll do my best to answer.
That is awesome. Very, very good. Yes. Like I said, you guys, Trevor's he has some amazing knowledge on a lot of things. Like I said, we had a full 3 days, 8 hours, 3 days, and I'm pretty sure he's got more stuff. So, yeah, tune in. Every 2 weeks we are going to be talking on a specific subject. You can email him or you can email me if there's something that you want us to discuss. My website is myrnayounghelps.com. If you wanted to reach out to me for anything, whether it's property management, whether it's real estate, whether it's being a guest on the show. But we definitely need you to encourage us by subscribing to the podcast and posting a review so that we can continue helping you to live your best life now. So, again, until next time, namaste.